Right, friends, welcome back to Policies and Programs. We have already discussed 2 modules and this is the 3rd module. In the 3rd module, we are going to discuss about black money, what is meant by black money, then Prevention of Money Laundering Act, that is PMLA 2002. We are going to discuss in detail about the PMLA. Then comes Financial Action Task Force, and the 4th one in this series is Black Money Act 2015. So these things we are going to discuss. And first of all, what is the black money? Black money is basically illegitimate money. Opposite to legitimate is black money. One is legitimate money, second one is illegitimate money. That means money earned through dubious means, money earned through other than legitimate means is known as the black money. Money earned through dubious or other than legitimate means is known as the black money, and we are going to discuss how the black money is generated. Before going into this, black money has got so many other names: parallel economy, underground economy. By whatever name you call it, it is illegitimate money or dirty money, please don't forget. Right. Look into the aspects how the black money is generated in the country. First and the foremost is the real estate transactions. In real estate transactions, we come across cash transactions in a big way. If the official cost of the property is rupees 10 lakh, then the value in real terms will be rupees 50 lakhs. The property will be registered for rupees 10 lakhs and the money exchanged between both the parties will be total 50 lakhs. That means 10 lakhs of payment will be done through check and the remaining 40 lakhs will be paid through cash. So this 40 lakhs is illegitimate money or dirty money, and that 10 lakhs is legitimate money. Let me explain you once again. If the property is purchased for rupees 50 lakhs of rupees, then registered value will be rupees 10 lakhs and the remaining 40 lakhs will be black money or dirty money. So like this, crores of rupees changes hands in cash form in real estate transactions across the country. This is one source of black money. The second source of black money is educational institutions. Educational institutions take capitation fee, and sometimes you pay in check. You pay in check for rupees 2 lakhs and they accept in cash for around 5 lakhs or 6 lakhs. That means in addition to the payment through check or demand draft, educational institutions, reputed educational institutions in private sector normally charge hefty amounts in cash form. That is black money. The amounts charged by the educational institutions in cash form is the black money, and sometimes they may give receipt also, and the receipts whatever they are giving are maintained in separate books, and these books normally do not reach the law enforcement authorities. If they give receipt also, those books containing these receipts do not reach normally law enforcing authorities. So the second source of black money is educational institutions. Third one is political corruption. Political corruption including payments or donations to political parties. Payments or donations to political parties is another form of corruption, because political parties have lot of unaccounted money. All of you are well aware, in the elections to legislative assemblies as well as parliament elections, normally rupees 500 rupees is given per each vote to some people, and rupees 1000 is given to some people to purchase votes in elections. So this is another form for generating black money. Like that, you have corruption in bureaucracy. Government officials at a lower level and higher level taking bribes is a bureaucratic corruption. Look at other things, the mines and mineral sector. Mines and mineral sector, precious minerals like iron ore, coal, these are mined without proper accountal. That is another source of black money. And if you look at other things, illicit liquor, several politicians are liquor barons in this country, and lot of black money is generated in the way of illicit liquor. Look at other forms of criminal activities like smuggling. In recent times, several kgs of gold smuggling is taking place into the country. If they smuggle, they need not pay customs duty. Customs duty on gold is 10%. If gold is smuggled into the country through illegal means, they need not pay anything. So that is another way of transaction of black money or generation of black money through smuggling. Last but not the least is underreporting of production. In India, we have several companies, and some companies report less than what they produce, and remaining production will be sold in black market. That is generation of black money. So these are the sources of generation of black money. And the other important aspect is how it circulates across continents, how the black money goes from here to there, from one country to other country. Lot of black money is going from India to Dubai, India to Mauritius, India to foreign countries like Switzerland. How it is going? One is Hawala route. Let me tell you how the Hawala money is transported. If you give money to a person in Mumbai, he or his agent will deliver money in Dubai by taking certain commission. The second aspect is smuggling of drugs or narcotics. Drugs are smuggled across the continents. And in smuggling, lot of black money is going from one continent to other continent. Third one is through underworld dons. Underworld dons are another carriers of black money from one country to other country by fear or by extortion. By fear or by extortion from the rich persons. The next one is under invoicing or over invoicing in exports and imports. Lot of commodities exports and imports are taking place across various countries. Sometimes they report less than what they are exporting or less than what they are importing. Sometimes they report more than what they are exporting, more than what they are importing. Bills will be generated, invoice will be generated for more or less than the actual quantities. In that way, money crosses across the countries. It crosses boundaries of the countries and it reaches other country in the way of exports and imports by under invoicing and over invoicing. That means inflating the goods or showing less than what the goods actually transported to other countries. So these are the ways how the money transfers from one country to other country or one continent to other continent, right? We have discussed how the money is generated, how the money crosses various countries to reach foreign country, and third thing which we are going to discuss is where it will land. After crossing the countries and continents, where it will land. First and the foremost is, it will land into the banks where secrecy is assured. Previously, Switzerland used to maintain bank secrecy laws. If people invest in Switzerland banks, no one in the world will be able to know about it. But now, secrecy laws are being broken because of international pressure. International pressure is induced by FATF. We will come to know about FATF short while from now. FATF is a Financial Action Task Force. It is looking into various aspects to prevent financing to terrorism, because a part of black money goes into the hands of terrorists. That's why they are procuring advanced weapons. FATF is behind controlling black money because of the sole reason it is part of the black money is going into the hands of terrorists. Keeping that in view, FATF is insisting lot of pressure on the banks where secrecy is maintained, and Switzerland is now opening it out. And several banks recently declared the account holders' names with the pressure of FATF. So, the savings in banks or stashing away of money in banks where secrecy is assured was the good olden days practice, but now this channel is coming down because of secrecy laws are being broken because of pressure by FATF. Second important aspect is investments in other countries. This money will go and that will be invested in shell companies or in tax havens. If you look at Mauritius, if you look at Cayman Islands, they are surviving on this illicit money only because this black money across the world is going to Cayman Islands. Cayman Islands is a small country in Caribbean Ocean. Lot of shell companies are existent there. Shell company means it is registered. No activity will be there. Money will be transferred there. Black money will come and land in shell companies. No production. They are only established to protect black money or to make legalize the black money coming from various countries. So, the money will land in shell companies or tax havens. That means, in the countries where the laws are favorable, this money will go and land in tax havens or shell companies. I told you, for example, two countries, Cayman Islands as well as Mauritius. This is second route. Third route is into the hands of terrorists. Part of the black money is going into the hands of terrorists. If money is transferred from Mumbai to Dubai, part of the money will go to the hands of terrorists. That's why they are procuring advanced weapons than army. And ISIS is able to establish their mark with advanced weapons. The main reason is part of the money is going into the hands of terrorists. LTTE had got advanced weapons in those days. Naxalites have got advanced weapons now. How they are getting these weapons? Insurgents in Northeast region have got advanced weapons because part of the black money transferred through Hawala route or part of the black money generated through smuggling, gambling activities is going into the hands of terrorists. Right, this is the third way. We have already discussed part of the money will go into the hands of terrorists. Second point is part of the money is invested in shell companies. For namesake they are companies. Actually they are not producing anything. And as well as part of the money is going into tax havens where tax laws are favorable. And the other point which we have discussed is money is going into the banks where secrecy is assured, but nowadays this channel is coming down. Look at the fourth one. The money which crossed and went to other countries will come back to the country of its origin, that is round tripping. The money which has gone into other country will come back to the country of origin, that is round tripping. Let us see how the round tripping happens. Right? Please look into this. Black money is generated in India. It goes to other countries, either through Hawala route or through exports and imports, under invoicing or over invoicing in imports or exports. This money crosses and goes to foreign countries. After going to foreign countries, I have already told you, part of it will go into terrorists, part of it will go to banks in Switzerland, and part of it will go to shell companies or tax havens. After got invested in shell companies, the money will again come back to India, which is known as round tripping. That means money from India is going into foreign land and there it is legalized, and through participatory note, these participatory notes are issued by foreign portfolio investors. foreign portfolio investors are registered with the SEBI. If foreign portfolio investors are directly investing in Indian stock market, there is no problem. But they issue participatory notes. They issue participatory notes and money comes to India. And the whereabouts are who are the persons behind participatory notes are not known to the regulators in India. So the money from India, black money, goes abroad, goes to tax havens, goes to shell companies, and through issue of participatory notes by foreign portfolio investors, this money again lands into India with the participatory notes issued by foreign portfolio investors. This is known as round trip. Right? What will happen when black money is in circulation? The biggest worry to the world is when black money is in circulation, this goes into the illegal activities, into the hands of terrorists, into the hands of smugglers, and that is the real worry for the world, right? So let us look at the Prevention of Money Laundering Act 2002. The main purpose in the world today is to prevent black money, to prevent circulation of black money, to prevent circulation of black money. Not only that, to prevent it going into the hands of terrorists, smugglers and drug traffickers. With that intention, several conventions were drawn by United Nations during the past 20 years. I have listed out the conventions drawn by United Nations. Based on those United Nations conventions, India brought Prevention of Money Laundering Act 2002. Prevention of Money Laundering Act 2002, which is popularly known as PMLA 2002, which was brought in the year 2002 and it is implemented across the country from 1st July 2005. So, before going into the details of Prevention of Money Laundering Act, exactly what is meant by money laundering? The definition I have given in this PPT. And in simple terms, it is making illegal money or dirty money appear to have come from legal source. It is making illegal or dirty money appear to have come from legal source. That means they use banks and financial institutions as a channel to legalize this. I will tell you one example. Up to 50,000 rupees. If you want to fix a deposit, up to 50,000 rupees, no PAN number is required. So what they will do? They will open 1000 accounts and they will deposit 40,000 each in each account, and which will make 4 crores of rupees. So that is the way how they want to bring black money into the financial system. So as to prevent these type of activities, this Prevention of Money Laundering Act was brought, and basically money laundering is making the illegal money or dirty money appear to have come from legal source. To prevent that, Prevention of Money Laundering Act was brought by India based on various conventions of United Nations, right? And all of you are well aware about Know Your Customer guidelines. Know Your Customer guidelines implemented by banks and financial institutions are as per Prevention of Money Laundering Act, right? Look at the various provisions of the Act. It is made applicable from 1st July 2005. Second important point is it confiscates illegal property. If it is found that somebody is having illegal money, it has got the powers to confiscate illegal property. And second thing is imprisonment can be there from 3 years to 7 years. It can confiscate illegal property. That means if it finds that there is a case of money laundering, that means the source of money is illegal, then it can confiscate the illegal property. And the second thing is imprisonment can be there from 3 years to 7 years. You may ask, who is monitoring these activities? There are basically two organizations in India looking into money laundering. I have already told you, know your customer guidelines were made mandatory in banks and financial institutions to prevent money laundering. Know your customer guidelines, and PAN is made mandatory if you are depositing fixed deposit of rupees 50,000. These type of guidelines came into effect basically to prevent money laundering. Right? So now two organizations are there to look into this money laundering. First and the foremost is FIU. What is FIU? Financial Intelligence Unit. The most powerful organization, Financial Intelligence Unit. It is with Ministry of Finance. It looks into suspicious financial transactions. It looks into suspicious financial transactions. Banks and financial institutions are supposed to give report as per the scheduled guidelines to Financial Intelligence Unit. If someone deposited 50 lakhs of rupees by cash into the savings account of a bank, that report will go to Financial Intelligence Unit. Financial Intelligence Unit, which is under the Ministry of Finance, will look into suspicious financial transactions. And if it feels there is something wrong, it will hand over the case to Enforcement Directorate. If a Financial Intelligence Unit, basically Financial Intelligence Unit is for the purpose of analyzing information with regard to suspicious financial transactions. They collect data from various sources like banks and financial institutions. If they feel there is a case of suspicious financial transactions, they will hand over that information to Enforcement Directorate, and Enforcement Directorate will further investigate and will take steps to confiscate that property. Not only that, we can impose imprisonment up to 3 to 7 years. So these two, FIU as well as Enforcement Directorate, are primarily concerned about money laundering. Right? Let us look at another organization which is looking into these aspects at world level. At world level, there is the Financial Action Task Force, or FATF. It is called FATF for GAFI. GAFI is the French name. Let us not bother about that GAFI. It is FATF, Financial Action Task Force, which looks into money laundering aspects across the world. As I have already told you, money laundering is the biggest threat to the global community because part of money is going into the hands of drug traffickers, smugglers, terrorists. That's why they are getting advanced weapons. So, FATF is the intergovernmental body established in the year 1989 to look into the money laundering aspects across the world. India is also a member of FATF. I have already told you, Money Laundering Act was brought as per United Nations Convention, and subsequently financial intelligence units are established in various countries based on FATF guidelines. Financial intelligence units, as we have discussed, which looks into suspicious financial transactions, were established to coordinate among various countries with regard to the suspicious financial transactions. So this is about FATF. FATF is based in Paris, which looks into money laundering across the world, and this was established based on the initiative of G7 countries. G7 countries are highly industrialized countries, and that is the group of 7 countries, and based on their initiative, this was established in the year 1989. Right? In this lecture, let us look at the last item. This is also pertaining to black money. This is Black Money, Undisclosed Foreign Income and Imposition of Tax Act 2015. Right? This is with regard to holding foreign assets abroad. Resident Indians holding foreign assets which are undisclosed or unaccounted for abroad. Resident Indian means if you are staying in India for more than 182 days in a year, if you are staying in India for more than 182 days in a year, that means more than 6 months in our country, you are considered as a resident Indian. There are other stipulations also. I am not going into other stipulations. I am just telling you broadly what is resident Indian. If you are staying in this country for more than 6 months, then you are considered as resident Indian. The biggest worry for income tax authorities is lot of black money is going from India and people are purchasing assets abroad, and resident Indians holding assets abroad, holding unaccounted money abroad can be punished as per this act. I would like to tell you 3 things. In the year 2015-16 budget, the Finance Minister announced 3 things. First and the foremost is for sale and purchase of property more than 1 lakh rupees. For sale and purchase of a property more than 1 lakh rupees, PAN number is a must. PAN means permanent account number issued by income tax authorities. That is made a must. Second point is government is bringing black money, undisclosed foreign income and imposition of tax act 2015, and this already became an act and this is going to be implemented from assessment year 2016-17. The third thing is government is going to bring Binomy Transactions Act. So 3 things. First one is the Black Money Act. This was already passed by Parliament and became an act and is going to be implemented from assessment year 16-17. Second is Binomy Transactions Act. This is not yet notified. Third is for purchase or sale of property more than 1 lakh, PAN is mandatory. So these 3 things were announced in the budget. In tune with the budget announcements, this act was brought recently, and salient features of this act is if some unaccounted asset is found abroad for resident Indians, if some unaccounted money or unaccounted asset is found abroad in the resident Indians account, then people have to pay tax at 30% of the value of the undisclosed foreign asset. 30% of the undisclosed value of the property. Not only that, a penalty equal to 3 times. That means 30% as tax and 90% of value of the property as penalty if some undisclosed property is found abroad. Second thing is, if someone is filing wrong returns without telling properly the assets abroad, then 10 lakh rupees penalty can be imposed. This is second important thing, and punishment or prosecution and imprisonment can take place up to a period of 10 years. And one more important aspect is the value of assets up to rupees 5 lakhs is exempted, because some students may go abroad for education purpose and value of assets up to rupees 5 lakhs is exempted. Right? And before implementing this, government is planning to come out with one-time compliance window. That means you come out clean, we will save you. That is the theory. You come out clean and we will save you. With that theory, government is coming out with one-time compliance window, and that window is going to be announced shortly, and under that window, tax will be charged at 30% and another 30% will be required to be paid. Government is going to come out with a compliance window, and people can use this one-time opportunity. If people fail to utilize this one-time opportunity, then they have to pay 30% tax as well as 90% as penalty. Not only that, rigorous imprisonment up to 10 years can also be imposed. Please don't forget, this is exempted for properties abroad up to rupees 5 lakhs. Right friends, we have discussed in detail about the black money, prevention of Money Laundering Act 2002, what is its significance, why it was brought. Third thing is, what is Financial Action Task Force, what is its main role, and the last one is Black Money, Undisclosed Foreign Income and Imposition of Tax Act 2015. So this lecture is basically on black money, as government is more concentrated. Parallel economy is too dangerous for the world, not only from economic perspective but also from the perspective of safety in the form of threats from terrorists across the world. Right friends, let us wind up this lecture. Please do join for 4th module. Have a nice day. Thank you.